Hello, everyone. I'm Jeremy Isles, and today I'm going to talk to you about today's market. What's happening right now? What's the latest, greatest data that just came out today? The report from FHFA. So that's the Federal Housing Finance Agency. And what I love about it is it's not your opinion, it's not my opinion, it's not realtors, GCs, other investors. Because I hear whenever I talk to them across the U.S., you know what they all say? My market is different. My market's hotter. My market's the best. It's the hottest. It's different than everyone else. Well, if I had a nickel, right, for every time I heard that saying, let's look at the data. Facts, data, logic. So here's the data that just came out today. Like I said, it's from Federal Housing Finance Agency, FHFA. And what they are is they'll let us know what the appreciation is. And this is for Q1, so the first quarter, so January, February, March of 2021. I know we're in May 25th is today's date. So that's a little delayed. Well, all the data, they got to aggregate it. So it takes them a little while to get the data. So once they have it all, here it is. I always set my calendar for mark this because I'm a nerd and I love the data because I want to see what's going on, what markets are going up, down, what's kind of the future, and I'll show you some of those steps. So I have it on this map so you can kind of look around and see. The darker the blue, the more appreciation, the more aggressive or the hotter that market is. And the Midwest is number one. It's the top in whenever they count, the mountain states is what they call it. But look at that, Utah, even Arizona, 17.4, really hot. Look at all these are double digits except Wyoming. Hawaii, 4.7, Alaska, 10.5. So whatever market you're in, look at Florida, 12.6. So I know we have a lot of investors and people that I work with in Florida. Look at that appreciation over the last 12 months is what this is. So the 12-month appreciation. Let's look at some other pages I want to share with you in this report. I'll put a link in the bottom of this video so you can download this report yourself. It's under fhfa.gov, and you go to HPI for House Price Index, and you can download it. So that's page 6, and then page 15 or 16 is where they have it listed, so you can see kind of the ranking of them all. Ending in, what is it, January, February, March of this year, 2021. This is the data, and Idaho is hot, 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 isn't it? And a couple other things I like for you to see and realize this, whenever you go through it, look at all of these are double digits. How insane is that? You have to go all the way to Illinois, number 44, down on the list before you start getting single digits, which is still a real high number, 9.64. And there's not one of them that's negative for the year, not one of them. And if you look at even for the quarter, this is the fourth quarter, the first quarter of the year, the latest data that just came out, and none of those are negative either. So this is the numbers I like to look at, the 1 year, the quarter, and then I like to look over here kind of since 91 Q1, and some of these are insanely hot. Look at that, Idaho 381, 450 for Utah, Arizona 316, and there's a couple that are slow and steady. Like Connecticut has not been crazy. It's been 109% since Q1. That's one of those tortoise and the hares kind of thing, nice and slow and steady. So those are great areas if you're getting started. Sometimes it's better to get started in an area that's not insanely competitive, because these more competitive the market is, the more competition there is. So whenever I coach students, guess what? I like these other ones that are showing slow and steady. Now, I wish these numbers weren't so high, but if you already own properties there, it's great. So I love that on all my rental properties, cash flow properties, man, they're appreciating. When you're starting off or doing a fix and flip, sometimes by the time you've rehabbed it, it's already appreciated in that time of just a few months. Because if you bought a home in January 1st, you closed on it at the end of the 3 months, look at the appreciation. Now, you don't want to bank on that. You don't want to count on that ever. If you're investing, that's the cherry on top. I want my numbers to be factual data. They work right now. And if they appreciate, even better. Okay, now one more thing I want to share with you that is so important. I'm going to have a calculator open, and the reason why I want the calculator open is we can kind of predict as if it's trending up or trending down. And what I mean by that is we'll look at the quarter. So this is the Q1, right, for the first quarter here, and let's type in 5.85. So I just type in the first quarter, and if you multiply that by 4, right, there's 4 quarters in a year, so times 4, and that means if every month is averaging 5.85, is that really a high month or not? Well, if I multiplied it by 4, it's almost identical, real close to the 1 year, just slightly underneath it. So that tells me this quarter here was not like a high one or it wasn't a low one, it was pretty steady. Now Utah, let's do the same numbers here, and you can do the math yourself for your states. We're going to start micro, right? States, but you can't stay states. You got to go cities, right? The metro areas. You can't compare all of California, all of Arizona, right? You got to go to Tucson is different than Phoenix, right? Phoenix is different than even Scottsdale and some of those micro areas, or some of the cities, the metros within it. So we're doing Utah, so 6.57 and multiply it by 4, right? There's 4 quarters in a year, and that is 26.28. So that tells us they're trending up, right? They're going higher than normal is kind of what the data is saying. Or you can do it kind of the other way, backwards if you want, or maybe it's not backwards to you. Take the 1 year and divide it by 4. 19.21 divided by 4, and that tells us it's around 4.8% a year is what it's been averaging, or a quarter. And look at what it's doing for this quarter. So that tells us it's trending upwards. So you can kind of predict and kind of see what's happening in the market. Now, some of these you don't even have to, you can do the math real easy in your head, and like South Dakota, 5.32. Well, if you multiply that by 4, that's going to be what, 21% or so. Well, that's definitely going up, isn't it? Some of these other ones, it's kind of right there, pretty even. Some are going up higher, right? You multiply, California is actually appreciating higher. So those are some data whenever you look at the big picture of the states, and you can see where your state is. Like I said, you can download this and look at it for yourself. Texas is trending up. Let's look at Florida. Where's Florida on the list? I think I saw them in page 1. Yeah, right here. So if we took 3.68, multiply it by 4, and let me pull up the calculator again. 3.68 times 4 tells us 14.72. That means it's trending up on that first quarter, isn't it? So you can see the data. Again, what I love about it is facts, data, logic. It's not my opinion, your opinion. What does the data say? And if we scroll down to the next page, it breaks it down. Now we're going more micro. It's going to this city. So Akron, Ohio, right? Is it trending up or trending down? Well, if I took this number and multiply it by 4, it'd be trending down some. So it's slowing down. It's still appreciating though. Do you realize that? It's not a negative number. So it's just not as appreciating as aggressively as it has been. Albany is definitely not appreciating. It's really slowed down, hasn't it? So you can find down here, look at Austin, right? Austin, Round Rock, that is extremely competitive. Now, all the students I coach and mentor and that I've helped for years doing this, if you try to chase the hottest market, it's gonna take you so much longer to get momentum, because the people that are there that already have the teams and stuff going and finding those deals, it's hard for an outsider to come in when it's already extremely competitive. Because if they're appreciating, look at how crazy this quarter is, right? 8.2, right? That is so insanely high. That's 1 quarter. That's higher than some places appreciated an entire year, some states an entire year, and it did it in 1 quarter. So extremely hot area. And again, you're going to have multiple offers, highest and best, and those areas are harder to get started in. So 8.2 times 4, look at that. It's trending on almost 32.8% appreciation a year. What do I mean by the appreciation? Well, real simple number. If you bought the house for 100,000, and they're saying, Austin saying, and there's other variables, but kind of big picture here. If you bought it for 100,000, which is too cheap for Austin, they're more expensive, but let me just keep it simple. And if it appreciated 22.73, 100,000, if you multiplied it by that, that's another 22,000 in appreciation. So next year that house would be worth $122,730. So massive appreciation. Baton Rouge, right? There's one that shows a negative. Just down a little bit. And again, slow and steady over here, but look at Austin over here. Wow, extremely competitive. So again, you don't want the most competitive markets if you're starting off. If you live there locally, then yeah, I would advise you, sure. Look at Fort Lauderdale, right? Again, it's trending upwards, right? If we take 3.61 times 4, that's going to be 14 something, over 14%. So again, it's trending up compared to what it's been doing. So you see how you can kind of see some of the, going up or down. Man, Grand Rapids really shooting up, isn't it? And then let's look at a few other ones here. And these are in alphabetical order. So you can find out whatever, if you want to look up Orlando, Kissimmee, Sanford, it has them right here. Again, trending upwards, isn't it? So we take 3.19, multiply it by 4, we're over 12. It's been 9.92, so it's actually going up. and some of them are going down, right? Philadelphia is going down. Now, does that mean you don't want to be in that area? Not at all. I would invest there all day, every day still, right? If the numbers, I'll take slow and steady all day. You'll see better results. And your whole goal is what? If you're investing in real estate, you want to make money, don't you? So do you care if it's in Phoenix or if it's in another market, as long as you make money. New Orleans, I have a lot of investors there. So again, it's trending up. So again, not as competitive as some of the other ones, double digits, which I like that. I like the I don't want an area that's super competitive where there's 30 other offers whenever I make my offer. San Antonio, right, trending up. Salt Lake City, insane, right, 18.45, right, trending up. And look at over here, the numbers that are extremely high over here too, those are more competitive areas. Now let me go to the next page, because the next one is an important one I'd like to share. The other one that I just walked you through is all the cities, the top 100 metro areas across the US. Well, now it breaks it down to the ranking. So those are just in alphabetical order. Now it's in the, if we're keeping score, look at how competitive these are. Right? Boise, again, comes in number one, as it has been for a while. Now, look at all these top four up here, almost all 400. Tacoma, Washington's at 21.58. Wow. And we all know that it can't keep going this trajectory, can it? The affordability is not feasible. Are you getting a 8.2% increase on your salary whenever things are appreciating this high? And that's affordability. And it's like, no, you're not. Most people aren't. And over the year, did you get a 28% pay raise? Most people aren't. Right? So again, affordability is getting harder and harder. So that's got to hit sometime. When, we don't know, but it will hit, and it's got to correct itself is what it does. And that's what happened in 08, the bubble. And there's lots of other variables, but that was a big real estate, subprime loans, neg-am loans, all of those things they were doing. This one's not that. It's supply and demand. And again, people moving out of the big cities, going to more rural areas. And look at that, right? Boise. Why is Austin so hot? Well, again, so many jobs are going there. Elon Musk, right? So many other ones I've talked about, building plants, stuff. And Austin's a great area. I love it. A great one to visit. I don't know if I want to live there. And traffic when I was there was bad years ago. And I'm sure it's not getting any better. Phoenix. I look at some of these, these are the top 20. Yep, even Camden's on there. Isn't that surprising? Anybody that knows Camden, New Jersey is not a great area. It's a pretty rough, you got to be real careful, some high crime areas. I do like this over here, but that's why it's so low, is back in the day, that was one of the roughest cities in the US. I know it's kind of coming around, still pretty rough. Look at New Haven, right? Not a lot of appreciation, but again, slow and steady, and look at what they're doing now. They're shooting up. So there's your top 20. The next page will show you the bottom 20, and only one of them out of all the metro areas, there's only, I think, one that showed negative. There might have been one that was negative for the quarter, Baton Rouge, but over the year, Baton Rouge, yeah, right underneath it, look at that. It showed negative over here, but for the 1 year, it's still positive, 6.43% appreciation. And again, I'm blown away with this, how crazy the market is, because if you look right down here, you're already at double digits. In the bottom 100, there's still some on this page that are double digits, over 10%. Oklahoma City and Charleston and Oxnard and Baltimore, right? Townsend, Birmingham, Alabama, Virginia Beach. Look at those. All of those are double digits. Isn't that crazy? So again, hot markets. I'll take these bottom list over the top most competitive ones. If you're starting off, again, if you're already in these areas, then great, be investing in there. Let's see, Florida, there's a lot of Californias on here I see, and the bottom ones in Illinois, you'll see again high taxes. Houston's down here, but again, that's still not bad. I mean, if you said your home appreciated 9.45% last year, you'd be thrilled to death. That's great. Over the quarter, it's what is that, trending up? Again, that's great. So Houston, such a huge market, lots of job growth going on. Hot areas. There's Orlando, right? Some of you are in Orlando. Look at that market. Again, it's trending up, nice, slow and steady. But again, with these numbers so high, even in the bottom 100, they're still so aggressive, so high, that it makes the market still more competitive. When the market shifts and becomes more of a buyer's market, these numbers are a little down, a little negative. I'll show you what we do at that time too. But there you go. There's the data I wanted to share with you. And this comes out every quarter, and it's always delayed because they got to aggregate all the data. If you like these videos and want more of them, please like them, subscribe, comment below. Let me know if you have more questions, you want more data about different topics. I'm glad to discuss them with you. Go out there, invest in your markets, but be safe. Don't speculate. Don't be one of those speculating that it's going to appreciate, because that's a house of cards waiting to fall. I want the hard data. I want to go by my numbers. I want to mitigate my risk, not speculate on it. So when you run your numbers, be safe and happy investing.